Well, joining us now is our resident expert, Michael Renking, rejoins me in studio. He's senior market strategist for the exchange. And Michael, not a bad day to be bullish, right?
Yeah, we're all feeling a little bit bullish today.
Yeah, that's the bull sign, right?
Yeah, that it is.
All right, good stuff. So market's opening fractionally higher. What do you think about these levels?
Yeah, look, we had a very strong day yesterday after that inflation report, which, kind of wasn't necessarily better than expected, right? If you look at the core numbers, we did see an acceleration. It actually broke a string of 3 or 4 months of better than expected inflation reports. But what it didn't do is necessarily derail the Federal Reserve from potentially beginning to cut in September. Markets, kind of took the ball and ran with it. We moved to fresh all-time highs, in the S&P 500. And what we also saw was a real big expansion of breadth, where we had kind of small caps and mid caps, really joining and leading yesterday. Mm-hmm. The Russell 2000 was up almost 3%, and it actually just turned positive year to date.
Wow. Okay, so that's a big one, right? Because we had seen those small caps lag for quite some time, especially as rates have remained relatively high. But I do wonder where we go from here, and if this overarching strength in what is a seasonally volatile or underperforming time of the year might lay the groundwork for some fall action.
Yeah, and I think that's kind of one of the really interesting things. We talked a little bit about it, kind of off air yesterday, right? Where kind of the broad consensus is that we're in a tough seasonal time period. Right, everybody thinks that markets, kind of need to pull back because we've had such a big rally. That puts everybody kind of on the wrong side of the ball here. And as we continue to squeeze higher, it just gets, kind of a little bit harder and harder, where to not be, kind of participating, right? And that FOMO starts to kick in. And, we're starting to see, kind of as the S&P is breaking to fresh all-time highs, you're starting to see some more involvement. Volatility has remained, kind of very dampened. You have the VIX under 15. The MOVE Treasury Index has moved to 3-year lows, right? So, we're really seeing a compression of volatility, right? And now you're finally starting to see, after you've had this very top-heavy rally for much of the year, you're finally starting to see some participation.
Okay, so the jobs data was disappointing, the most recent jobs data that we got, including, going back to May. The inflation data relatively in check. We'll see what the producer price index does show us tomorrow, but markets have indicated that they do expect the Fed to cut rates in September. We had heard from Treasury Secretary Scott Bessent earlier. He thinks that rates should be at least 1.5 percentage points lower. It does seem as if you have the economic case, and then you have the pressure that Chair Powell has been experiencing, certainly in Washington. What does that mean for the path forward?
Yeah, it's still sort of a difficult path, because the Federal Reserve wants to see kind of how the inflation picture evolves. But with the kind of the big revisions that we had to last month's jobs numbers, right, that does suggest that the labor market and that side of the equation, is a little bit weaker than they had previously expected. I really think that the September jobs number that's in a couple of weeks is really the gating item in terms of how things move. Mm-hmm. We've even heard some suggestion, kind of by the Trump's new nominee, right, that we shouldn't release that data. I think that would be, kind of a bad situation to not release that data. But I think that's the gating number. We did start to see. Under the surface, you're seeing kind of different pockets of the goods inflation start to pick up. But there are areas of the market, and I had a personal experience where I had to just go buy a dishwasher. Right, it was on sale pretty significantly. I was sort of surprised given the backdrop. Right, you saw yesterday appliance numbers were down 0.9%. I think part of that is there was such a pull forward of demand, and now these a lot of companies and retailers are sitting on inventory. Right, and they don't want to sit on that inventory too long, so they're marking down some of the prices. Right, so that's also probably dampening some of the inflation numbers. The services side was what surprised people a little bit yesterday.
Yeah. Good point there. I've noticed a lot of goods on sale this summer, too. Kind of just seems like a rolling sale environment. Yep. Michael Renking, you got your bullish swag on?
Bullish.
That's right. All right, everyone. He's a senior market strategist here for the Stock Exchange. Michael, thank you as always.
Thanks for having me.
Yep. All right, well, still to